Alright, chat. Oh, we got Jeeves Stobbs in the chat. What? Let's go. Let's get some emojis in the chat. Need a dual stream, man. Need that Runtman emote. These weird little creatures. Woo! There we go. Alright, chat. We'll go through the trades and look at the general market performance. I think there was a Bloomberg article I wanted to look at real quick. And then, oh yeah, I was gonna look up setting up bracket orders so we can find the best. I saw it once, I don't remember how to do it, so I gotta look it up again. How to do it inside TOS. You can't really do it on the web. So we'll look at setting that up. And then, a little thing on YouTube I saw the other day. Verizon and edX are, for 1 year, you could like sign up and you could take like a bunch of different courses on edX for free. And one of the courses is the New York Institute of Finance stock trading one, where you take the little test for a certificate. So I've been watching those videos. That's pretty cool. That's like a $200 course. So if you're looking to learn something new, you might want to look into that. They don't ask for any payment information for 1 year. You have to do like 30 minutes of learning or something. There you could read the stipulations. But if you wanted to learn something new or just do something different, that might be an option for you. Kind of a cool opportunity. Anyhoozle. Yeah, let's get into the trades of the week. Aren't very many. Should have done more to finish out. We'll get there. We'll get there. Show my screen. Oh yeah, and then we'll go over the events for the week, and I'll try to get a short out before the day is done. Let's go mainstream. Here we go. Everything else ready to go. Let's take a look. It is now. Okay. Bitcoin doing? Did I get rid of that position? Or did it like expire? I thought I had like a Bitcoin position. Oh, it was assigned. Well, shit. Removal of future due to assignment. Expired future. Okay. Okay. We got Bloomberg here. Let's see here. Okay, I think it was this one I wanted to look at. Anything on China? Top trades. Major cities ease home buying rule, rolls out stimulus. So there's a few of them. China policymakers vow to sturdy incremental economic measures. China moves to cut mortgage rates to revive housing. Major cities ease home buying rules as China rolls out stimulus. Xi finally realized what's ailing China. So there's like 3 articles. I don't know if I can read all 3, but we'll keep this page open. Okay, let's get into our trades and then we can go to China. We can go to the far-flung reaches of the world after we deal with what's going on right in front of us. How come I don't remember the market, like, I don't remember the market doing this on Friday. I don't know why I don't remember. Like, it went down. Like, well, at least the NASDAQ did. Like, I don't know why I don't remember that. It kind of went up and then it went down. Didn't really do much. Kind of went back and forth. Ended where it opened. Super strong. Maybe I did notice that. Like in the moment, it never seems so crazy. And then you look at the charts and it's like, well, why didn't you jump in there? Like, why aren't you jumping in? But yeah, let's look at the trades. Alright, we got them up here. This one might keep going. I might think about re-entering this. We'll see how Intel does. I don't know. Intel is like, I don't know. They're like gonna tear that thing apart. Back up to 24. I mean, I don't know. I don't know what they're gonna do with this. I mean, maybe you get a gap fill. I think that's, you know, maybe all you get here. So we want an exponential 9. And then we want an exponential 15 and a different color because it's really hard to see that. See the difference between the two. Okay. It's technically a buy, but you wouldn't want to buy again until it's 22.41. I don't know, maybe it goes to 30, it fills the gap. It filled this gap, it filled the gap from, you can't see this on what I'm looking at. So it filled the gap from 32 to 34. So it's just at least gonna fill this gap and then we'll see. So I'll keep it on my list, but I'll keep it on my list. It's an opportunity, I guess we'll say that, but it's like I don't really care about Intel. I should, but I don't. Yeah, let's just look at this trade. So we'll just, what it is, it's really all it was news. Maybe it could have gone longer. I'm sure volatility is gonna pick up. Like, oh. AI job threat urges next generation. What does that Sam Altman want us to do? Urges next generation to embrace the technology so he could be a billionaire. Rah. No, and at the same time, these got the dock workers. You know, they don't want any automation at all. I think that's unrealistic. That's completely unrealistic. But that's what they're saying in their demands. They don't want automation. So if they don't want automation, you're not going to get AI. I don't know what I have, Chad. There's something going up my nose. I don't know what's going on. I can't be sick. I have to unwill the sick. Like, we gotta get rid of this. I don't know where I got it from. I don't even go outside. But I guess wherever I did go, it was enough to pick up some nastiness from someone else. So there we go. Or it's like bird flu. I'm not entirely sure. Kind of feed birds in the mornings, but I'm doing that like all year, so I don't know if we should blame the birds. Blame it on the rain. Gotta find somebody to blame, so blame it on the rain. Gotta blame it on. Is there a rain emoji? I'm not getting anything done, just so you know. I'm just not. Is there a rain emoji? Is there somewhere we can see raindrops? Because they're gonna blame it on the rain. Although we haven't had any rain, so I don't know if you could blame it on the rain. You can't blame it on the rain. Blame it on the excessive heat warning. They should redo Blame It on the Rain like some climate change song, but then like make it about climate change. Anyway, Blame It on the Rain. I don't think anybody knows what I'm talking about. Anybody that watches streaming probably doesn't know what I'm talking about. And I can't play it because then I'll get some copyright junk. Anyway, let's look at our trades. How about we focus on that? I'm really having a hard time today. So if we can at least get through the trades, we can work on everything else. I need to set up that bracket order though. And I might change one of my charts. Put some different things on it. So always looking to improve here. What's this? This would have been above VWAP. The only time I trade this is like above VWAP but I need to start keeping track of how much risk. Did I record what time frame I traded this on? So this was on the 25th. Did I record Oofy doofy? I'm gonna have to take a I'm gonna do my charts and then I'm gonna go get some emergency. Go back 30 October, folks. I didn't even put a and no journal, no trade. Like that's got to be a rule. If I don't even have the journal page in here, I can't trade. Anyway, let's go to the 25th. I did 15-minute time frame. Look at that. Look at that. Look at that. I wrote it down. Look at that. Look at that improvement. That's like magical. It's not magical. But I wrote it down. No writing, no journal page, no trade. No writing it down. No trade. Like, you got time to write these down and think about it. You got time to just jot some ideas, so when you go back, you know why you did it. Sometimes you look at trades, you're like, the heck? And you don't know why you got into it. And you gotta know why. But I only trade TQQQ when it's above VWAP, and it looks like... In the hell? On the 26th? Man, this market crazy. Like, I don't... we're going to October and like there's 2 weeks. What is it, like 2 weeks till bank earnings? No, it's like a week and a half. Yeah, no, it's 2 weeks. I don't think bank earnings start until the week of the 14th. They always kind of start around the 14th. So then you got earnings all of October. Fed meeting is on the 7th of November. God damn. These next 4 weeks are gonna be wild, yo. What I need to do, though, which I haven't been doing, is keeping track of things that are earnings winners. So, like, I need to get the list, and then after earnings, be like, winner, 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 and see where they are. Look at all the winners. You look at the losers, too, but the winners are probably more follow through with the winners. Especially thinking about, usually there's some kind of rally. Not that we already haven't had a rally. Maybe it'll go the other way. I don't really know. But look at those earnings winners, make a list. That's all. How about I just do that? If I just start there, we'll be good. I wish I could do some automated thing for that, but I don't think any of the scanners I have, like, you know, like, did they beat this and that? I don't know. You have to find a scanner that could do that. Oh yeah, I remember that. I think oh man. Yeah, no, it went up and then it just went straight down. Oh, it's not showing my trades. It's so annoying when it doesn't do that. Here we go. I mean, not a terrible trade. Ain't $100 though, but it got above VWAP. I got in, put my risk down below. I took 250 shares too. That's pretty good. Yeah, I like that. Took a decent size. Successful. It's good. Not really what I wanted. I don't know what this just did. There we go. Okay. Oh no, did Fava make a mess? Oh yeah, my clothes. Whoops. Next one. Oh wow, this one was even good. Look at that. I didn't write it down though, so that's not good. Alright, let's look at this here. 2K. Did I get into it strictly because it broke VWAP, or is it because it broke a trend line? What day was this? This was the 25th. I mean, it was weak, but I wouldn't say that there was a real strong reason to get into this. Like, it's like below VWAP. That would be my only, that's not how we should trade these. We could have kept doing it all day long. Let's see what we missed out on. That's not what we wanted to do. We want to actually do this. No, I think I was just a wimp here. It was. Oh. Above VWAP. So and I trend line break and I didn't stay with it. Oh, I missed out on $1,500. And wait, this went to $35? Oh man, really? Oh, whoops. Oh. No, this isn't right. No. I don't get this. Isn't correct. It's not the right product. It only went up to. This is not the right product. I don't know how to fix that. Yeah, it's picking up the wrong product. That's bad info. It's like the prices are right, but the information's wrong. It only went up to 21.21, which was still $100, but or $200. But yeah, I don't know. This one's bad data. Let me put that in there. This is not. It's the wrong ETF. I don't know how to update that. This one's right though, and I missed out on money on this one. I think this was a trend line break. So this was a trend line break. I think it was somewhere in here. It was like this trend break. Yeah, it triggered the entry to that trade. Oh, kitty. We're here, kitty. This would have been above VWAP, but didn't work out. Maybe I'll use the AI to see how often that particular... Okay, that's it. So let's go to AI. Hmm. Hmm. I guess we can... Getting selected, okay. Alright, just looking through my trades. I want to know what above VWAP. Okay, so 19 wins, 12 losses, so 19 plus 12. So 19 divided by 31, 60%. Oh boy, that's nice. Okay, so we'll keep doing that. Trendline break's not working so much. Oh shit, I got a bunch of stuff on my face. What the hell? Yeah, my trendline breaks aren't working so well. The VWAP's working better. The covered calls are working. Anything with options isn't working. That's funny. Iron Condor kind of worked. Swing trade worked. What were these? Okay. Yeah, these are some bad boys right here. This was nice. Yeah. Need more like this. And not enough trades, 7 trades. It's alright. I'll pick it up. So yeah, I mean, I think too, I looked yesterday, like, I need to be trading more stock. Still, I've been saying that every week. So more stock. I don't think options, I really want to do futures, but Because I've seen what they could do in the paper trading account as far as how it moves around, but yeah, that's a lot of risk. So, you know, more stock, shorting stock, buying stock. You know, options aren't my game right now. I don't know that I should. I'll watch my videos on options again. I think the key thing is following the rules. I don't know that I can't say for sure that that's what I was doing. I think I was jumpy and nervous and I wasn't following the rules. But I've figured something out kind of with TQQQ. I have some new strategies I want to try. So we're going to make one of these charts the experimental chart, and we need to change this to October. So first and foremost, let's get rid of duplicates on my chart. So let's keep TQQQ, SQQQ, UDAO, SDAO, UPRO, SPXS, TNA, TZA, TLT, GDX. XLE is good. I don't trade this text thing. I don't trade that. I can keep Soxel on here. Soxel's got enough volume and activity. Sox S. That's good. We have USO. I don't know what. GE Health, I'm not. Oracle, no. 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 Can't have duplicates. Probably not enough activity. No, we're gonna reset. Gold, maybe? That's Barrick gold. Just because gold and SLV, yeah, let's put SLV on there. Because that could be tradable. I have gold like 3 effing times. What the hell? Let's go ahead and save this. And we're basically in October, so we're just gonna label this October. And I have this in my notebook. I have the risk, I have what I'm doing, the time frame, all the things. But let's just focus on stocks. I mean, I don't know. I know I could do well with stocks. I mean, if we look at just stocks, just for this year, if I just did stocks, I mean, it's not a lot, but, it's green. You know what I mean? Is it more out there? Anyway, if it was just stocks, it'd be green. I'm not right. I was looking at on my other computer. I gotta look at my other computer then. Numbers were different. It's like 50-50. Oh man, I just need to make more money on my winners and my losers. They're like 1-to-1. Oh, I just need to break through, chat. I just need to hold my winners longer. I pick... Oh, it's 50-50. Oh man. Something doesn't seem right though. I'm gonna be real. This doesn't seem right. I have to look at my other thing. Something's fishy here. I have 50-50. Alright, well, let's take a look at... So, trading more stock for sure. See, these numbers are different. Total P&L. Hmm. Oh, let's look at the month. We can look at the month. If I just did stocks this month, I'd be up $400. That's $100 a week. I mean, it's not a lot, but... And all 15 of them are wins. I need to be trading stock. It doesn't matter what the win is. This is what we need to be trading. For some reason, I can trade these. I don't know what it is, how it is, why it is, where it is. But, I don't know what this is either. But stock. Yeah. We're gonna have to let everything else go by the wayside. And just focus on this and focus on the setups. I mean, we know that we can supercharge... Wait, what did I just do there? Okay. Was this the stuff I got out of to get in that stupid Nvidia trade? Anyway, that was a mistake. This was his futures trade. Alright, I think we know what we need to do. Let's go ahead and look at how the markets did this week. It's kind of easier to see on Koyfin. Let's get that up and running. Okay. And then maybe we'll look at some news. Alright, let's put it up here. And then next weekend we'll do year in review. And I need to look for some swing trades. Okay. Alright, 5 days. NDX up 1%, SPX up a little tiny bit. Okay. Everything kind of came in. Not a big deal. Russell's lagging. That's crazy. But the markets are still up. Oh man, crazy. Maybe there's like a little micro pullback. Maybe we get like a little micro one and then it goes back up again. So the Russell's kind of lagging on the week. We have NDX up, SPX up, and this up. Let's look at alright, that is above the peak here. So if it pulls back, maybe it's a buy. If this China thing is real, I'll read those articles real quick. What those are all about. Like they didn't participate at all here, but then just made it up in 1 week. That's crazy. So what is this? This is GXC. EXC. I know about FXI. Okay, let's take a look at these. It's pretty sparse. Yeah, the trading is really, really narrow in GXC. Yikes. Yeah, what about FXI? I think FXI is more. Yeah, this is 40 million. There's a lot of volume in FXI. Okay. Let's take a look at FXI. Oops, no, that's not what I want to do. Alright, let me go back here. FXI. Okay, let's see. So the high was 54 back in August or March of 2021. it just broke out of this. I wonder if it'll crash back down. Let me do, let me look here. Yeah, better buy would be around 29. Or, yeah, I mean, if you want to be disciplined, it kind of has to be down here. And then you add more as it gets down to like 28. But then you don't add any more after that. So we'll see on this. I'm somewhat intrigued. We'll read that China article. So China had the stimulus and it made everything blow up. So we'll see if it's sustained. This is coming out of a long, long base. So it could be something that keeps going. But I think we need to see how it behaves. So we'll look at as markets open. We'll see how FXI, those types of things trade. Because it will trade in the after hours, so we'll take a look at that. But ION, FXI, kind of the first thing on the watch list. Let's just take a look at Alright, still very much bullish on the MES. YM. I will have to put the other trend lines on there and see what that looks like. But we're still kind of up, so there you go. Oops. I so badly want to put... Did kind of break out of this trend on the 1 hour. Did come down to here. Close. Yeah, it did break out of this downtrend, so maybe we're bullish here too. Everything's pretty bullish still. Crude should not be bullish. This might be not bullish for a long time. So we'll see. This might be a short if it was able to get a little bit higher or reach the top of this trend line, or even up here. Put in an order to short somewhere up here. As long as we don't go into some protracted conflict somewhere, that might be the only monkey wrench in that plan. But all indices are up. My one idea probably is FXI, so we'll take a look at that. I'll look into that a little bit more. Let's see. So here's kind of a look at our domestic situation. This article I wanted to look at from Bloomberg. The prospect of second big Fed cut hinges on Powell and job reports. So this week, lots of job reports coming out. The slowing inflation data expected from Eurozone to South Korea. Colombia set to cut rates. Poland and Iceland to hold. Appetite of the Federal Reserve policymakers for another large interest rate cut in November may come into better focus in the coming weeks as Jerome Powell addresses economists and government issues new employment numbers. The Fed chair will discuss the U.S. economic outlook at a National Association for Business Economics conference on Monday. So Powell on Monday, y'all. At the end of the week, the September jobs report is expected to show a healthy yet moderating labor market. What's unemployment going to be? Payrolls in the world's largest economy are seen rising 146,000 based on the median estimate in a Bloomberg survey of economists. That's similar to the August increase and will leave the 3-month average job growth near its weakest since mid-2019. The jobless rate held at 4.2%, while average hourly earnings are projected to have risen 3.8% from a year earlier. U.S. labor market is moderating. Economists expect 146,000 job rise in unemployment and elevated jobless rate. Okay. Recent labor unrest suggests Friday's jobs report may be the last clean reading of the U.S. employment. And then to throw a monkey wrench in all this, they might go on strike on the East Coast. The dock workers, yes, right here. Fed policy meet in early November. Boeing company factory workers walked off the job mid-September, and dock workers on the Atlantic and Gulf Coast are threatening to strike from October 1. In addition to the heavyweight monthly payrolls report, job opening data on Tuesday are JOLTS are expected to show August vacancies held close to the lowest levels since the start of 2021. Economists will also focus on the quit rate on dismissals to gauge the extent of cooling in labor demand. What Bloomberg economists say. We expect a robust headline print for September non-farm payrolls, which could even revive talk of no landing for the U.S. economy, but we think the headline figure will overstate labor market strength, partly because of the overstatements related to the BLS death-birth model, and partly due to the temporary seasonal effects. Industry surveys will also help shed light on the private sector hiring. The Institute for Supply Management releases its September manufacturing survey on Tuesday, and services index 2 days later, both of which indicate measures of employment. So lots of data this week. In Canada, home sales data for several of the nation's largest cities, Toronto, Calgary, and Vancouver, will offer a look into how real estate market is faring after a series of rate cuts from the central bank. Elsewhere, data predicted to show slowing global inflation from the Eurozone to Turkey to South Korea. as well as business surveys in China, are among the highlights. Oh, like I like the days of the week. That's cool. Oh, neat. That's a cool little chart. Click here for what happened in the past week, and below is our wrap of what's coming up in the global economy. China kicks off on Monday with a new slew of purchasing manager indexes a week after authorities so this data could be bad because they released all that stuff. The official manufacturing PMI may tick higher while staying contractionary. Contractionary, and the Caixin gauges are seen holding steady just above the boom or bust line. China's seen missing growth target in 2024. Manufacturing PMIs are due a day later from Indonesia, Malaysia, Thailand, Taiwan, Vietnam, and Philippines. In Japan, Shigeru Ishiba is expected to be named Prime Minister in the parliament. Oh wow, there's a lot going on next week. The Bank of Japan's Takkan survey will probably show business sentiment at large firms remain optimistic in the third quarter, while small manufacturers stayed slightly pessimistic. Companies are seen revising their capital spending plans a bit higher. South Korea's inflation is forecast to have cooled in September, while the central bank on an added incentive to consider pivoting to a rate cut in October, while price growth in Pakistan may have eased to the slowest pace since early 2021. Trade data from Australia, Sri Lanka, and South Korea and Vietnam releases third quarter gross domestic product and September inflation next weekend. Eurozone data will take center stage, with inflation in France and Spain now below the European Central Bank's 2% target. Reports from Germany and Italy on Monday, followed by the overall result for the region on Tuesday, will be closely watched. Okay. With traders now pricing in the rate cut at the October ECB meeting, the economists starting to shift focus to predict the same. The data will be crucial evidence for policymakers who'd earlier leaned toward December for their next move. Industrial production numbers from France and Spain on Friday, meanwhile, will provide a glimpse of how weak manufacturing was during the quarter about to end. The week features a multitude of ECB appearances starting Monday with President Christine Lagarde testimony to the European Parliament, followed the next day by a conference in Frankfurt hosted by the central bank. Monday will be the final day in office of the Swiss National Bank President Thomas Jordan, who just oversaw a rate cut and the signal of more to come. His deputy Martin Schlegel will succeed him, and Thursday we will see the release of the first inflation data under his watch. In Sweden, this is a lot going on this week. In Sweden, minutes from the Riksbank's September 24th meeting on Tuesday will provide more insight on why policymakers decided to cut rates and open the door for a faster pace of easing. Mozambique, Iceland, Polish, holy man. There's a lot going on next week. Index, so this is kind of important. In Brazil, 3 purchasing manager index and industrial production data can be expected to show that Latin America's biggest economy is running hot and above its potential growth. Oh wow, invest in Brazil, let's go. Brazil's budget metrics have deteriorated. Okay, post-pandemic recovery is reversing amid jump in spending. What? What's this mean? Nominal. I don't understand this graph. Right, that I don't understand. There's a lot going on though, yo. We got Powell on Monday. Can ChatGPT give me the key takeaways? So I kind of want this to be in line. I don't want this to be too wild and crazy. Maybe you do want it to be wild and crazy, because then they gotta cut more. But if these strikes keep going on, that might make them cut. It'll look like unemployment's higher. No. Oh, I don't have this. Oh, that's sad. I just get the basic news. Basic news. The other thing I had, kind of hot. I read about China and then I got to take a break. So let's look at China here. So this is an opinion piece, so we gotta take it with a grain of salt. But maybe it'll give us like a summary of like what they did. Once bitten, twice shy. The supercharged stimulus measures. Let's listen to it. I can't read.
Finally realized what's ailing China. Once bitten, twice shy. The supercharged stimulus measures China's top leaders announced in recent days has left many investors unconvinced. After all, Beijing has been vowing to revive growth with rate cuts and special lending programs for months, to little avail. The property market is cooler than ever, producers' deflation is entering a third year, and youth unemployment hit a record high again. Investors have been asking me how this round of stimulus is different. Is it the whatever it takes moment for China? Has the economy gotten so bad that it finally hit Beijing's pain point? Now that FOMO, or fear of missing out, is kicking in, global asset managers are once again debating whether the government has the will, the competency, or the fiscal space to restore economic confidence.
Okay.
I am not one to say where President Xi Jinping's pain point is. Anyone who claims to know is bluffing. But looking at the latest policy announcements, it's clear that top leaders have finally realized what is really ailing China, and why past measures have not worked. 3 details jump out. First, the fiscal power. For the first time since 2018, the Politburo, headed by Xi, discussed economic matters in September, topics usually reserved for the April, July and December meetings. Boosting fiscal spending took front seat in the readout. China is experiencing what Nomura Securities economist Lu Ting calls a second wave of shocks. In the past, local governments played a helping hand by promoting regional growth and luring businesses to relocate to their jurisdictions. But with the property downturn and dwindling revenue from land sales, they have become an impediment to society. They've been imposing exorbitant fines on things like traffic violations in order to make their own ends meet. In the first 8 months of the year, non-tax revenue grew by 11.7%, while land sales tumbled by 25.4%. How can people have any confidence in the government if their first point of contact, often low-level civil servants, are arbitrary and unreasonable in their fee collections? In deep economic slowdowns, a government needs to fire on both fiscal and monetary cylinders. While the People's Bank of China has been cutting interest rates, the rest of the bureaucracy has been sitting idle, or even worse, annoying citizens and companies. The 2024 budget called for the government fund account, which includes spending on infrastructure projects, to hit a 4.9 trillion yuan deficit. As of August, the deficit was only 2.1 trillion yuan. The latest Politburo readout emphasized fiscal spending and borrowing, including the issuance and deployment of ultra-long sovereign as well as special-purpose municipal bonds. It's a sign that Xi is now aware white-box monetary easing has not worked. Second, youth unemployment is perhaps as big a headache to the government as the property slump. China's universities churn out more than 10 million graduates each year. The jobless rate for urban youth aged between 18 and 24 hit 18.8% in August, even after the Statistical Bureau changed its data methodology in January, prettying up the numbers by excluding students from the labor pool. There's a detectable shift in official rhetoric. Last May, Xi told young people to eat bitterness and embrace difficulties as he did in the 1960s, only to be mocked online. He changed his tone this year, calling for quality jobs instead. Last week, the government said it would provide some social security benefits to those who haven't found a job 2 years after leaving universities. It's a tacit acknowledgement of the structural labor market issues Gen Z are facing. In its bid to shift to new growth engines such as EV manufacturing, the government's regulatory crackdowns on real estate and financial services have reduced employment options for many. There are plenty of blue-collar jobs out there, but do the educated urban youth want to go back to the assembly lines or be food delivery riders for Meituan, even if these gigs pay better? Providing quality jobs has become a new official slogan, which is a good start. Third, the property market. In May, China unveiled a broad-based rescue package, including lowering mortgage rates and converting some unsold homes into public housing. As part of that plan, the BOC opened a 300 billion yuan relending facility so that state-owned entities can buy apartments from distressed developers, who in turn might get some cash to complete and deliver pre-sold flats to homebuyers. There has been little drawdown since. As a result, the central bank will ramp up its relending program, providing 100% of the principal, up from 60% previously. This is perhaps China embracing the essence of its traditional medicine: tweak and double down the dosage if previous remedies fail to yield results. No doubt, being bearish about China is one of the most popular trades, and asset managers have been fretting that Beijing's easing measures don't work as well as before. However, this round of policy announcements is a bit different, in that the new slogans sound more informed and in sync with sentiments on the ground. The table is perhaps turning for technocrats. More from Bloomberg Opinion. Chinese takeout in Saudi Arabia? You bet, Shuli Ren. China's credit bazooka isn't what it used to be, John authors. China adds a touch of showbiz to its stimulus, Daniel Moss. Want more Bloomberg Opinion? Up and go.
Up
Or
and
you can
go, let's
subscribe to
go. Okay. Well, I don't know if that necessarily clarifies anything. But I'm still interested. We'll see. People are kind of excited about this. We'll see what happens during the week. That's one idea I have right now. I think I have to go back and look through things. Right now I need a little bit of a break. So I think I'm going to end right here. And then I will do some more of my own stuff. And then put out that short a little bit later. And again, try to focus on stocks. But thank you for stopping by. Make sure to hit the like and subscribe button. Follow us at Wolves First so you always know when we go live. And have a safe and profitable trading week. Oh, and remember that this is for educational and informational purposes only. Not intended to be a recommendation or advice. Trading is risky. Please do your own research. But again, have a safe